The AI boom has been one of the hottest investment trends of the last few years. Companies that harness artificial intelligence are seeing massive growth and attracting billions in investment. But recently, AI stocks have taken a hit, dragging the Nasdaq down into correction territory. So, is this just a short-term setback, or is it a golden buying opportunity? In today's video, we'll break down two of the best AI stocks to buy right now during this Nasdaq correction. These companies aren't just riding the AI hype, they're making real money and dominating their industries. And trust me, the last stock is an absolute powerhouse that you won't want to miss. Let's dive in. First on our list is Meta Platforms. Ticker Meta. You probably know Meta Platforms as the company behind Facebook, Instagram, and WhatsApp. With over 3.3 billion daily users across its platforms, it's a social media giant. But Meta is rapidly evolving into something much bigger, an AI powerhouse. Meta's advertising business is already a money-printing machine, generating a massive $160 billion in revenue last year. But what makes Meta a top AI stock is its aggressive investment in artificial intelligence. This year alone, Meta is planning to spend up to $65 billion on AI infrastructure, including a massive new data center. One of Meta's biggest AI plays is its large language model, LLaMA. This advanced AI technology is powering new products, including AI-driven assistants integrated across its platforms. The more time people spend using AI-powered features on Meta's apps, the more valuable these platforms become for advertisers. That's a recipe for long-term growth. And here's where it gets really interesting. Meta's stock recently dropped 11% in just 1 month. That's pushed its valuation down to 24 times forward earnings, making it a bargain compared to its recent highs at 28 times earnings. But before we proceed, here's a question. When the market dips, do you see it as a red flag or a golden ticket? Comment your thoughts below. If you believe in the long-term potential of AI and social media, this market correction could present a valuable opportunity. With Meta at a discounted price, it might be a great time to invest and capitalize on future growth. Next stock is Broadcom, ticker AVGO. If you use the internet, you're using Broadcom's technology, whether you realize it or not. Broadcom's networking solutions handle over 99% of global internet traffic. That's right, almost all data flowing across the internet relies on Broadcom's chips and infrastructure. That's a mind-blowing stat, isn't it? Imagine a world without Broadcom. Now, let's talk about Broadcom's role in AI. The company is seeing explosive demand from cloud service providers who need powerful connectivity solutions for AI workloads. In its most recent quarter, Broadcom's AI revenue skyrocketed 77% to over $4 billion. And infrastructure software revenue wasn't far behind, climbing 47% to more than $6 billion. That helped push total revenue to a record $15 billion, a 25% year-over-year increase. The secret behind this growth? Broadcom's AI-focused chips and accelerators, including its next-generation XPUs, designed to power cloud-based AI applications. And the future looks even brighter. Broadcom is already working with 3 major cloud providers on AI infrastructure, representing a serviceable market worth up to $90 billion by 2027. Despite these massive growth opportunities, Broadcom's stock recently took a hit, dropping 26% from late January to early March. But after reporting strong earnings, analysts are taking notice. Before this latest correction, Broadcom was trading at 37 times forward earnings. Now, it's down to just 28 times, making it a strong buy for long-term AI investors. With the Nasdaq correction in full swing, you might be wondering, what does this mean for the average investor? Let's break it down. Corrections can be unsettling, but they're also an opportunity to reevaluate long-term strategies. Historically, major market corrections have often paved the way for some of the most lucrative buying opportunities. Do you think this dip could be the calm before the AI storm? The current market sentiment is a mix of fear and optimism. On one hand, concerns about U.S. policy decisions and international tariffs have shaken investor confidence. On the other hand, the rapid advancements in AI technology continue to drive innovation and revenue growth across industries. This duality creates a perfect storm for discerning investors looking to pick up quality stocks at discounted prices. Consider this. While short-term volatility might deter some, long-term investors know that the underlying fundamentals often tell a different story. Companies like Meta and Broadcom are built on strong foundations with robust growth prospects. They've weathered past storms and are poised to emerge even stronger as the market recovers. Now, let's take a moment to compare these two titans of the AI industry. On one side, you have Meta, a company that has redefined how we connect and communicate. Its massive user base and innovative AI-driven products offer a clear advantage in capturing consumer attention and advertising dollars. Meta's strategic investments in AI, particularly in areas like augmented reality and advertising optimization, could drive exponential growth in the years ahead. On the other side, Broadcom is the unsung hero powering the digital world behind the scenes. Its critical role in managing global internet traffic and its foray into AI-specific hardware solutions provide a robust foundation for future growth. With a focus on cutting-edge technology and strategic acquisitions, Broadcom is not just keeping pace with the AI revolution, it's setting the pace. Of course, every investment comes with its own set of risks and uncertainties. With Meta, regulatory challenges and competition in the social media landscape could pose hurdles. Additionally, heavy investments in new technologies like AI-driven VR might take time to pay off. Are these risks manageable in the long term? That's something to consider. For Broadcom, the risks primarily stem from market volatility and potential disruptions in global supply chains. Despite its strong performance, broader economic factors and international trade policies could impact its operations. However, the company's diversified product portfolio and strategic market positioning provide a buffer against such challenges. It's all about weighing the potential risks against the reward potential. Do you believe the rewards outweigh the risks in today's market? Share your thoughts below. Looking at this table, it's clear that both Meta Platforms and Broadcom are heavyweights in their own right, but they each bring something unique to the table. Meta's higher market cap and strikingly high gross margin underscore its dominance in the digital space, where massive user engagement and AI-driven advertising continue to drive revenue. Even though Meta doesn't pay a dividend, its impressive EPS suggests it's funneling profits back into growth areas like virtual reality and advanced AI. On the other hand, Broadcom's market cap may be smaller, but it's still huge, especially for a company powering so much of the world's internet traffic. Its dividend yield shows it's committed to rewarding shareholders, and while its gross margin isn't as lofty as Meta's, it's still strong for a hardware-focused business. Ultimately, this table highlights how both companies have carved out different niches in the AI boom. Meta by innovating on the consumer-facing side, and Broadcom by building the essential infrastructure behind the scenes. So, there you have it, two of the best AI stocks to buy during the Nasdaq correction. Meta is leading the AI revolution in social media, while Broadcom is powering the infrastructure behind AI-driven data centers. Both companies are positioned for massive growth in the years ahead, and this recent market dip could be a rare opportunity to buy them at a discount. Here's something to think about. If you had to predict, what's the next big stock market trend that'll take everyone by surprise? Drop your predictions in the comments. And if you want financial freedom, check out these 3 AI stocks that could change your life in 2025. Check out this next video.